Hey everyone, this is Jay Soloff from Investors Alley, and this is our trade of the week. So this is not a trade that is part of one of my trading services. This is a trade that we're looking at for educational purposes only. So we are here at marketchameleon.com looking at the unusual options volume screen. So what I normally do is I sort things by volume to see where the action is. So you can see a lot of big names up here: Tesla, Amazon, Ford. You can also see what the breakdown is between calls and puts and the average volume. You can look at how much the stock has moved, and you can look at if there's earnings or some other event that might be causing this unusual activity. So that's normally what I do. But something else that you can do, which can be useful to find interesting trades, is sort by relative volume, which is how much the options have traded compared to what they normally do. So here's an example of a stock, Burgundy Technology Acquisition, that normally trades 120 options, so barely anything. And that's traded 12,000 today, so 100 times the normal amount. That is something that can be eye-opening, and you can look at, all right, well, there's no earnings going on, so what may be causing this? And then you can look here and see, 99% are puts. So something interesting is going on. Maybe someone's taking a downside bet on something. They expect some news coming out, or could be something along those lines. You can see a similar thing here: 70%, 70 times regular volume with 363 up to 25,000, 100% puts. Both of these here look like Burgundy and Altitude. These look like SPACs, shell companies. So maybe there's someone taking a position in a bunch of different SPAC type companies. So that's where then we can dig into it. We can go and we can look at this Burgundy Technology. Again, it looks like a SPAC, which just has like a money to buy other companies, and it's just kind of an open checkbook to buy companies. It used to be pretty popular earlier in the year, but have since lost quite a bit of luster. We're looking at this here. It's about $10, and so we can look at the trades, and usually I sort by quantity and see if there's anything that stands out. And in this case, there isn't, right? There's a lot of smaller trades, but they are all spreads here. These are all multi-leg, and it looks like there's a whole bunch of them. And likely what happened is that a block trade would have been too hard to pull off in this option chain, which doesn't trade that much. And the spreads are obviously really wide here, as you can see, between the bid and ask. So likely they had to do this 10 at a time to get filled at reasonable prices, possibly throughout the day. Although it looks like a lot of these happen around the same time. But it just looks like someone is rolling out October to January. So they're selling their October positions that expired today, and they're buying the same strike, the 10 strike, which is the at-the-money strike in January. So this could be a couple things. It could be someone betting on the downside of SPACs because they have definitely lost their appeal compared to where they were before, or it could be someone who has a big position in this and is simply hedging, or other SPACs, and they're just hedging across a bunch of different public SPACs. So interesting way to look at it, and this is the sort of analysis that you can do just by kind of looking at unusual trades, both by size, by relative volume, by calls versus puts. So this is the sort of thing that is publicly available that you can look at. Again, I'm here at marketchameleon.com, and this stuff is just dig into it a little bit, and you can find some interesting situations going on that may help you trade or avoid trades. So that's what I have for you. If you're interested in looking at a service that trades calls and puts, I have one. Option Floor Trader Pro, there's a link on this page. If that's the sort of thing you're interested in and you want to learn to trade options, then check it out. Other than that, I will see you soon.